Good afternoon, everyone. Welcome to the graveyard shift, I would call it. But please, we'll try and do the best we can to wake you up after lunch. Lunch was great, by the way. Thank you, DMCC. And so it's my pleasure and honor to moderate this session. I have to say, I've never really moderated more than 4 people. So it's a bit like directing traffic on Sheikh Road, having 6. So I'll try to keep everything on track. I'm just going to make some opening remarks, and then we'll turn it over to really a distinguished panel. A bit like before, I'm not really going to go through and introduce everyone and their backgrounds and so on. It's really a fantastic panel, and we wouldn't really do justice to it, frankly, just by going through it in a few minutes. So I think we'll start with tokenized assets, which should promote financial stability, financial consumer and investor protection, and market integrity while promoting competition. Over the last 5 years, the tokenized market has grown in terms of the number of service providers. Each launch, whether by an organization that has in some form blessings of the country or the sovereign, or a private managed company, or a bank, the growth of the sector seems to have stalled after numerous launches. Whether the methodology is blockchain, a distributed ledger technology, or conventional banking system, the fact is that volumes haven't grown to the anticipated levels. And it appears that nobody really wants to talk about it, except we are going to talk about it today. That said, the total volumes held through these platforms issuing tokens or gold certificates have increased, but that's due to the number of new service providers driven by the initial unit creation process. However, there are organizations, including people here today, that target not just the financial consumer, not just trying to make some money, but also trying to help clients, investors, protect their wealth with gold tokens, which are, to a certain extent, less volatile than legal tender fiat competition. But also, gold is simply the best performing asset class over a period of time, whichever period you want to look at. It could be 5,000 years, it could be since 1971. Gold since 1971 is up 6,000%. Gold since 2001 is up 600%. And this year, I think we're up around about 8%, is that correct? So I don't think we need to be pushing gold as the asset class, but we are going to address tokenization and beyond. I love the title. The first questions were due to be addressed to Mr. Abdallah Abu Sheikh. So, Nirali, you're up actually, Nirali Shah Quenta. And I'd like you to explain your product, G-Coin, I think with the minimum size is 1 gram of responsibly sourced gold. So, Nirali, over to you.
Thanks, Jeff. Can you hear me? Yeah. Firstly, thank you for the invitation to speak about Kenta and G-Coin. As background, Kenta is a global fintech. We have our own blockchain platform, and we tokenize real-world assets, particularly commodities. And then we use those tokens and integrate them into our more traditional financial products to unlock access, liquidity, utility. So G-Coin is our flagship product. It's, as you said, the token is a digital title of ownership to gold, to physical gold, that has firstly been tracked on our blockchain as it moves from mine to refinery to the vaults, ultimately sitting in the vault, in secured license vaults as a kilobar. And all of that information, that identity of that kilobar, so the provenance, the chain of custody, the ESG information that is associated with the supply chain partners that produce that gold bar is also captured on the blockchain. And then that gold is minted into 1 gram Gcoin tokens. So, with, as you said, with the sort of history and status of gold as this safe haven asset, we basically wanted to democratize access to gold. We wanted to make it accessible to everybody through digitization, fractionalization, and removing some of those, barriers to entry that smaller retail investors face, in terms of price, in terms of accessibility, having to worry about storage costs. Now you can basically go into the Kenta app, buy Gcoins at your convenience for as little as 0.01 gram. But going to the point that you made in your introduction, we are one of those companies that are not just tokenizing as a medium of exchange, as a store of value, but also as a medium of exchange. So we wanted to give gold utility. And, we launched Gcoin as a consumer product in the US about 3 years ago. But since then, we've been really building this whole infrastructure and ecosystem around Gcoin. I think tokenization is the easy part, right? You can tokenize anything and you're just codifying the asset. But it's really, what can you do with that token that makes it an interesting and attractive product? So since then, we've really been building a lot of extra sort of development around Gcoin, not just from a digital wallets perspective to store that gold, using those digital wallets for peer-to-peer exchanges, but also integrating it into more traditional payment rails. So, like debit cards, we produce debit cards for third parties. So you can have a Gcoin debit card, or integrating or putting Gcoin onto our point of sale solutions or local connectivity solutions as a payments tool. So there's a lot of build work that's been happening in the years since we launched.
It's very interesting. Just a question, it's a bit of a pointed question. Why would a customer that buys 1 gram of gold be particularly interested in whether or not it's responsibly sourced?
I think it depends on the customer's preference, right? So some customers may be interested in the price alone. Some may be more interested in the functionality or the ecosystem benefits. Some may yet be more ESG conscious investors. So, I think it really depends on the consumer's preference. What we're doing is giving choice to the customer, right? If you want to, should you wish to, you can go into your Kenta app, tap into your Gcoin holdings, and you'll see exactly where that gold was produced in terms of the mine that it was produced at, where it was refined, and where it's sitting in terms of storage currently, should you wish to, right? But I think the more critical aspect to this is that regulators and institutions should care about the responsible sourcing and the integrity of that gold. Jeff, you and I were talking the other day about the ever-increasing scrutiny on the funds being used to purchase gold products, right? So rightly so, there should be as much scrutiny on the actual gold origination. Where is it being produced, by whom, how, and so forth. And I think we've heard about responsible sourcing from pretty much every single speaker this morning.
Absolutely, yeah.
So it's, I think it's a critical thing from a regulation perspective. And to add to that, what I'll say is that we're actually looking to launch Gcoin in the Middle East early next year. And as part of that, through our Dubai offices in Dubai, we've had the technology, so not just the Gcoin product, but the tokenization technology, the traceability, the supply chain traceability technology, validated as meeting the ethical principles for Sharia compliance.
I think that's it's a very good answer, and my own answer would be everyone should be interested in this. It's a key thing. Just to change tack, Abdullah. Mr. Abdallah Abu Sheikh, who's CEO of Astra Tech, or better known as Botim. I'm one of your clients, actually, so congratulations on Botim.
Hello.
Yeah, so can you just explain to the audience O Gold? I love O Gold. I love the tagline, but can you just tell us what this product is all about, please?
So I think with Bottom or with Astra, we're super focused on consumer platforms. So we are the region's biggest consumer platform by number of users. And irrespective of what we call the products or how we launch them, I think most of our products remain pretty intuitive or have to stay pretty intuitive at a core level. And with gold, I think gold is not the newest asset, right? Not the newest asset line, but it's an asset that everybody understands. It's something that everybody wants to be on. Everybody feels is safe and secure and can hinge a lot of bets on. And it's you know, irrespective of the demographic or the age group, we think it's an in-demand or there is this pool of users that really need access to this level. And our job becomes to simplify their access to this asset and give them a completely easy or the easiest way for them to be able to invest, own, hold, buy, and sell those assets.
So what really gives you the conviction or gave you the conviction that this initiative would work? Because it's a fairly crowded space, I would say. I'm involved with one of the local banks here, and you know, there's looked at various products and platforms and so on, and they stretched across the page. I mean, there were quite a number. So, what really gave you the motivation and conviction that this would work?
So, what makes me think things will work is I always bet the simpler things are, the more likely they are to pick up. We've earlier this year taken a similar bet with an extremely competitive space as well with international money transfers. Very ancient, very mundane, very old business that's extremely competitive as well. And we've managed, you know, within the past 2 quarters to grow to become the biggest digital remittance player in the UAE. I think with gold it's about the same. Although there is a lot of brick and mortar businesses that work around the asset, the need for digitization has to happen. But I think there's been a critical problem with digitization that it's usually done by engineers that overcomplicate it, which deters your users away from it. We tend to oversimplify it. So if I told you, instead of going into a gold shop, you would just have to text the gold shop and you have the gold in your wallet. It's a pretty compelling offering for some people. Some people would rather still go and see their gold bar over there.
Particularly in Dubai, trying to get to the gold suit from JLT at this time of day. I think that's a very good answer. Thank you very much. Something that I think we'll touch on a few times is really what protection do you give the investors?
So again, back with any financial assets that you handle in a country like the UAE, not everybody can just pick up and build a platform and say, hey, now I want to hold assets, equities, money, and so on and so forth. It's very heavily regulated, and the regulator is extremely shrewd with the way they run their processes. So there is a very big protection layer that is, first of all, required and demanded by the regulator themselves for any company to be able to go into any sort of financial transaction. And we deal with that because we operate one of the biggest digital wallets as well, where people store hundreds of millions, if not billions, of dirhams as it is already. The second burden that we have, you know, if you own just a gold shop, you probably have to hire 2 security guards and you're good to go. The problem is when you digitize things, you need an army of engineers that can defend your digital infrastructure to protect those assets and develop this sense of security, which is our technical protection layer. So there is a regulatory protection layer, there is a technical protection layer that you need to have in, and at the end of it, there is a financial veil or a holder of last resort layer that you also need to give people comfort. I think one of the most challenging things with digital gold was, where is it? Do I really own it? Or who has it, right? This is also, there's also a layer of, there's always this payer of last resort sort of intuition with any asset owner is, do I get access to it whenever I want to, or do I not? And here it comes down to our own company financial policies of whether it's our leverage, how much equity we keep in security to liquidate people as in real time and instantly, and so on and so forth. So yeah, that's how it would.
Thank you very much. So we were waiting for you before we started, but it was
That's
great.
fine.
Yeah, it's okay. So now, Chris Cleverly is president of Tingo International. Would you like to just explain briefly your product, platform, and customer base?
Sure, thank you very much. So Tingo is probably Africa's largest agri-fintech. Our business produces an opportunity to farmers, essentially, which is to have a platform upon which they can put their whole digital, their lives on there. We started off by leasing out a mobile phone, a smartphone, and very much like the Botim business as well, which is very interesting. It's about distribution. Once you actually have the distribution, then all the other things are things you put on top of the platform. So we go out to 12.5 million farmers now and rural people. We turn over, up to these last 3 quarters, I think it was 2.5 billion, just under that, dollars. And we make about 800 million gross profit out of that. So we're a scale business, and out of that business of providing this platform, this digital platform, we started putting layers on top of it. So we started with a trading platform, which allowed farmers to buy and sell their goods, so they could buy their inputs, their pesticides, their fertilizers, etc. And then on top of that, they then could sell out their vegetables, their fruit, their harvest. So, and that was a very good business. We charge a small percentage for doing that business, as well as obviously making money on the lease of the phones. And then we put a layer on top of that, which we do with Visa, which is we call Tingo Pay. So for us, being mainly based in Nigeria and across Africa, the fungibility of currencies is very important. Can we trade elsewhere? Can people move the money around? But also internally, just the sustainability of the value of money is very, very hard. So when 45% of all the world's gold comes from Africa, it seems like a natural resource that we should actually be going to some sort of a level in which people can store their value in part or whole there. And not to look at it in terms of these very big financial institutions moving gold or traders or whatever, but just ordinary people, market women, families who have to work and just want to store something for their kids that want to go to school. And they want to actually keep up with the depreciation of their currency. So that for us, I think, really was the stimulus for this. And to be honest with you, in 2018, we've been looking for this opportunity to really begin. And it's only really now that and you can see some of the participants here at the table, it's only really now that the actual technology, the custodianship is really being understood. So the security of the gold is very, very key. Who owns the gold? How they make money from that gold. When they lend that gold, do they lend that gold? These are all key questions that we're going to discover the viability of, the veracity of in the near future. But it's going to be a very big thing.
Do you feel as though that you've actually brought banking to the unbanked in a way? And I love the idea that you lease out mobiles, because the purchase of a mobile is expensive anywhere. And I can imagine that the percentage of the monthly salary to buy a mobile in Africa would be very difficult. So that's really a fantastic idea.
Thank you, Jeff. I mean, it's prohibitive for people to do it's prohibitive not to have one. It's prohibitive to afford one, and so people are caught in a poverty trap, a digital poverty trap, and this as you noted, wholly opens it all up, and we think that this particular opportunity for gold will not only just benefit the farmers and ordinary people, but it will also probably transform the value of gold. If you can imagine the liquidity that occurs when you suddenly onboard tens of millions of people into usage of gold, you can see how it can push to $3,000.
No, absolutely, because you go across millions of people, and let's just say 1 ounce. And then you're up with, you'll have as much gold across Africa as there is in India, just with individuals. So, but a question. It's a bit of a tricky question. I've written down here tricky question, so I'm going to ask it. What if government bans using privately issued tokenized gold as a medium of exchange? If it's banned, so you can't go into Starbucks and buy your coffee because the government's banned it.
For us, it's less of an issue where it comes from, personally. I believe that a decentralized system is the best, because I think gold has always been a decentralized source of value, and that's what's made it so liquid, that's what's made it so powerful. So to decrease that wouldn't be great. I think that outside of that, you would, for us personally, you would have something like the meager insurance provided by the World Bank. That's a very good system. You would have peer-to-peer systems, and you would make sure that the custodianship tended to be, in the UAE, for example, here at the DMCC, where you've got someone who's a sovereign can also sit behind it, and then it becomes a bilateral conversation between sovereigns.
Yeah, look, I think that's a very good point. I've just also got written down here, where does the credit risk lie? Where is your gold? It's in the UAE?
So we would do it here in the DMCC.
Fantastic.
We think it's a fantastic spot. I think, the gold flows here are phenomenal. I think the relationship that Dubai and the UAE has with Africa is well trodden.
Yeah. And
is one that we all feel very secure with. But people have their own choices, I guess.
Well, thank you. Thanks, Chris. Navin, I know very well from his time at DGCX, and I've known you, 10 years?
I think more than 10 years now.
I won't admit to any more. Anyway, but tell us about ComTech and the growth of your tokenized gold since, I think you launched at DPMC in 2022, is that right?
Yeah, so we did the partnership with DMCC in DPMC 2022. And that's where we started the tokenized version of gold using on blockchain and on cryptos and the others, where people could buy and sell gold in a tokenized form. And due to the regulatory element, we wanted to ensure that there is enough governance, enough trust. That's why we tied up with DMCC, used the trade flow systems on top of it to ensure that every token that is minted is actually backed by physical gold. And we have seen a huge demand. We saw in a span of 1 year, we have moved from ground zero to 145 kilos of gold already tokenized. And during the span of this year, we also got a lot of demand from people who say that, okay, you're doing well on the crypto side. What about traditional investors? We love the idea of digital gold, but when I sell gold, I should have money into my bank account. How do I do that? And this is where we launched the digital gold linked with bank account using fiat currencies almost a month back. And that is also picking up a good response from people.
Yeah, congratulations on that. It's a very, very interesting, really interesting initiative. What about your geographic reach? Are you held within the UAE, or are you looking to wider kind of, I'm thinking India actually.
So currently, as such, the geographical reach of the tokenized gold is worldwide, because on the blockchain and the crypto side, you can go to any jurisdiction. But the retail one which we have launched is starting with UAE. The aim is to move on to the GCC, where you have the IBAN and the other support. India, yes, a lot of people come in and say that, how do I buy digital gold? Can I redeem it in India? We say not as of now. But that's definitely an area where we would be trying to work with a local partner out there, because there is no sense for us to go and develop everything. So as everybody talks about, it's importance about distribution. So we can provide the infrastructure, but we can go out to a local distributor and use that to develop the whole ecosystem.
Yeah, fantastic. I must ask you, at GTEx, apparently you had a long queue of customers at your stall. What was that all about? It's just that they were amazed at ComTech, or you were giving something away, or?
So that's where at GTEx is where we launched the retail digital gold application, where people could buy and sell gold digitally using their bank accounts. And the beauty about in any of these events is actually the gold bar. The moment you have gold bars on your stand, people are automatically interested and saying that, okay, how can I get that? And we tell them, yes, you can get that digitally through us. And what we have tried to do out here is, as the other panelists told about, is for a retail investor, if somebody wants to invest in gold, you either have a CFD platform, but there is no gold in a CFD platform, you're only speculating price. Or the only option is to go to a gold market, a gold souk, and go and buy gold in a physical form. You're buying a physical gold because you don't have a choice. But with the digital element, you already save on the price, you save on the making charges. You get up one day and you say, oh, the price of gold is good, let me buy 1 gram, which you cannot do at the gold market. And as what you rightly pointed out, going to gold souk from JLT itself is a nightmare.
Yeah.
So what we have tried to do around is allow investors to buy gold digitally, linked to their bank accounts, with complete flexibility in the minimum denomination is half a gram. So half a gram you can buy gold. You can buy in any multiples, store it in the wallet. And at the same time, majority of the investors come and say that, okay, how do I redeem it? Where is the gold if I want it? So what we try to do is we have now tied up with Kalyan Jewelers.
Okay, interesting.
So what, as an investor, I can keep on investing in digital gold, keep on buying smaller units, 1 gram, 2 gram, as and when I accumulate, I can just go to a Kalyan Jeweler shop, which is going to go live in the mid of December, buy whatever jewelry and everything, and tell them that I want to pay in gold. So the moment on the app you say, I want to redeem it in gold, an instant voucher of the value of gold is created, and the customer can redeem it for anything that he wants to buy.
Does that include the making charge?
Sorry?
Does that include the making? So they've got gold, debit gold account, credit Kalyan, but what about the making charge for the jewelry?
So everything is taken care in the same price, because the way we operate with the jewelers is they work as accumulators for us, where we settle them on a kilo basis, and they actually become a point where people can accumulate smaller denominations to them. So this becomes much more flexible for them. And what you do away is, you're not doing a 1:1 saying that, okay, you bought 24 karat gold, you need to only redeem in 24. It's your choice. You invested in gold. Now you can monetize it to buy anything, right from diamonds, 22 karat, 18 karat, anything. And the roadmap, as what the others have said, is to make more utility by launching the debit card, which we are working on with the bank, and which would come in so that you can buy coffee with your gold debit card and with your gold. And there are ways to move around, as what you said. What happens if the banks stop accepting as a currency? But you don't need to exchange gold. You can monetize it at the same time you swipe the card and use actually your underlying dirham or dollar currency to actually do the payments. So you act as a merchant where somebody swipes a card, immediately from the wallet on the latest price, the gold gets sold, and you actually use the dollars for settlement. So that's the way you can work around.
I tell you, ComTech is a really great example of entrepreneurship in Dubai. And I would say to the audience, really, only in Dubai do you get stories like this. And really, congratulations. And with Abdallah both of you is really, I mean, Boatim's known around the world. So congratulations to both of you. We're going to turn slightly away from the tech side of it now and bring Keith into the discussion. It's slightly different. Keith, why don't you give the audience a brief overview of what you do, what Monetary Metals does, and about yourself.
So thank you, Jeffrey. So I founded Monetary Metals with a vision to bring gold back into, shall we say, a more serious monetary role. Is everybody familiar with Warren Buffett? Warren Buffett famously, every few years, he seems to want to take a whack at gold. And he says it's useless. We pay people to dig it out of the ground. We pay more people to put it back underground and guard it. It's neither productive nor procreative. It has no utility. And he's sort of right, although extremely disingenuous. So Monetary Metals is changing the model. And we have a proposition to gold owners, which is we pay interest on gold in gold. A yield on gold paid in gold, that's our brand promise. So rather than paying for storage, you're getting paid to put your gold to work, and that's how we move forward to the gold standard. It's by bringing gold back into the market in this way. Now, how do we do that? We work with jewelers and mints and refiners and recyclers and high-tech manufacturers, low-tech manufacturers, bullion dealers, jewelry manufacturers, jewelry distributors who have inventory that needs to be financed. And the conventional way of doing this is, I don't know if everybody's familiar with the expression, a Rube Goldberg contraption. It's unnecessarily complicated. They typically borrow dollars, they buy the gold's inventory, and then of course there's a price risk. What if you borrow $1 million, you buy $1 million worth of gold, and then the price of gold drops 10% in a few days, which it could do. So then you have to borrow more. You borrow $1.25 million to put $250,000 into a brokerage account and start shorting gold futures with leverage, which gets a little complicated, and there's risks and moving parts and obviously cost and complexity. What we do is we lease them the gold. So with the consent of the gold owners, we say we want to lease your gold to this entity, and people say yes for this interest rate, and then we lease it to the jeweler or the refiner or the mint, whoever it may be, and they get the finance they need for their inventory. The owners of the gold still own good title to that gold. It's now on lease, not conceptually different from leasing a mobile phone. It's still owned by the lessor, which in this case is the investors. And the businesses that are getting finance are, of course, happy to get that finance, and they're happy to pay interest to get that. We have another program which is lending gold to companies that have a gold income, such as gold miners. So they need, let's say, $10 million to build a new plant. We say, okay, we'll lend you 5,000 ounces. You have to repay 5,000 ounces plus the interest. And again, we're paying the interest to the investors.
A couple of things I'd like to pick up on that. You mentioned, if I heard you correctly, that the depositors of gold with you, they get to give input on who the gold could be lent to? Is that, have they got some decision making over
yes,
the credit?
They have the control over whether their gold is used or not, and to whom
yeah, but if it's used, can they influence who it's lent to?
Absolutely. They look at each deal and say, I like him, I don't like him, I like that jurisdiction, I don't like this jurisdiction.
Excellent. And do you run your book in gold?
Everything we do is denominated in gold.
Fantastic. So you're a bullion bank without being a bank.
We are not regulated as a bank. In the United States, it is illegal to say the word bank if you don't have a banking charter.
Yeah, but it's okay here, honestly.
But conceptually, I mean, people have gold they give us.
Absolutely.
Businesses need the gold. We're the market maker bringing the two together.
You're talking to somebody who spent the last 15 years trying to develop bullion banking and just having a gold balance sheet, really, and getting away from everything else, lend gold, borrow gold. Everyone asked me earlier somebody said, so what do you do? I said, I do gold. And I know about gold, I really don't know about anything else, or football.
Rant a moment. I think everybody in the gold space should keep their balance sheet denominated in gold. It presents a simpler, clearer, cleaner picture of the health of the business versus if you keep it in currency.
It's such a great thing, and here the key aspect of the market here is jewelry, and in fact, when you look at the global demand-supply equation, I think it's 60 or 65% still is consumed by the jewelry industry, and so jewelers here, they will take a gold loan and turn that gold loan into gold jewelry. And so they actually, the jewelers run a gold against gold balance sheet through that.
It totally makes sense. And if you do it in currency, it's Rube Goldberg. It just becomes more complicated.
Yeah.
And you have to deal with the price changes. And all
Just
that.
have to get the banks to denominate gold loans in ounces, not dollars.
Well, that's
maybe
what,
that will happen.
That's what we do.
But you're not a bank, and you're not a bank in the UAE. Keith, what do you think are the growth prospects for your business in the UAE, and the GCC generally, and the UAE particularly? You've been here now, certainly I've seen you for the last 2 years here, so you've probably been coming longer. Do you see a good potential for your type of business in this part of the world?
Yeah, I mean, clearly there's an enormous amount of gold activity already going on here. And when you look at, countries, not to name any names, that are trying to de-dollarize, there's no other paper currency that's going to work. The US dollar is it for international finance and international settlement. There is one thing that can replace the dollar, and that's gold. So if you start to think about country A buying oil from country B, and then country B buying textiles and spices and whatever from country A, and settling the differences, if it's not going to be dollars, it'll be gold. And I think initially they're going to put gold bars on an airplane and fly them, which is terribly inefficient. I think that's phase one. I think phase two is when they start to see, let's pick a jurisdiction where we can all store some gold there. And then instead of having to fly a bar over, instead we can just call up the warehouse operator and say, just transfer the receipt or receipts for these bars over. And I think logically that jurisdiction is Dubai. I don't think there's any other jurisdiction that even makes the list.
That's such a great segue. I mean, you've seen my script, I think, because the next question is there room for digitized and tokenized gold to play in your business model?
Yeah, I mean, I think we're not, in essence, a technology business, although I have a software background, so we tend to think in terms of software eats everything, ultimately. We see it as a facilitator. If software can take friction out of the process, which we certainly use it internally, then we're all for it. But we're not overly tech focused. We're focused on the actual transactions. Okay. You have commodities such as oil and food. You have transactions that people need to do. How can gold facilitate that in a way that isn't possible? It's got to be about disruption. If you're saying, okay, let's use gold to buy a latte at Starbucks, the thing we got to realize is it's already pretty easy to use, UAE dirham or dollars to buy a latte at Starbucks. Is gold really going to be meaningfully better than this? Well, maybe. But if you start talking about international trade, there are scenarios in which the dollar doesn't work at all and can't be made to work. And then suddenly it becomes clear why it's gold.
I agree with you entirely. I mean, people here in the UAE will know that, the two of us could be sitting in Dubai and we do a gold trade and we settle in dollars. And it actually doesn't, at best it gets settled tomorrow, and maybe it's even 2 days. So, that's one last question for you. Should private gold leasing be brought under any regulatory oversight?
I'm a free marketer, and I think that the best regulation is reputation. And I think there's a tendency when something's regulated that the minimum standard that the regulator sets becomes the maximum standard. But I'm a big believer in audits. I'm a big believer in transparency and governance, responsible gold custodianship, and we're working on some ideas on that to bring to the industry in the not too distant future. But if regulation comes, it is what it is. We think we've got a pretty smart playbook for how we do things. Yeah. And we're happy to be open and sharing with that.
It's quite interesting because Dubai when I first came here in 1997, I was asked about, you know, the regulatory oversight. Now, in essence, there wasn't any, but the gold souk was very, very well self-regulated. They had certain standards, and everyone really followed those standards. And so, in essence, self-regulation is the best possible way to do things. It's just you can't trust everyone to do that. Thanks, Keith. It was really, really interesting. I think it's fair to say that we are potentially on a cusp of a new paradigm driven by the digital gold revolution. We're kind of on the way, but really only the future will tell, and what the impact would be on the global gold industry. So having talked largely on digital, we're now going to shift our attention to Ronald. Ronald Peter Stoffele is a managing partner and fund manager at Incrementum AG in Liechtenstein. Ronald is a supporter of the Austrian School of Economics, which is not something I'd heard about until earlier, but it's fascinating, and I'd like you to tell us about that. And also, Ronald is the author of the excellent In Gold We Trust reports, and he will now give a different perspective on what we've been hearing so far. So, Ronald, over to you.
Thank you very much, Jeffrey. Good afternoon. Well, explaining the Austrian School of Economics in a couple of sentences is not easy. I would say it's the no free lunch school of economics. So it's basically the opposite of the Keynesian policies and the MMT policies that we're seeing, especially in the Western world. I think one of the key things that differentiates the Austrian School of Economics that it's actually discussing our monetary system. And for example, inflation. It is being used as a term for rising prices, but the Austrian School of Economics as well, actually inflare, from the Latin word, means inflating, so increasing the money supply. So this is the real root cause, and rising prices are only a consequence. But I've written a book about the Austrian School of Investment and how you can use it for portfolio management. Now, to answer your question, Jeff, I think it's the main problem that we have in this industry is that gold actually is already a perfect product. I mean, gold stood, you know, through trial and error over 5,000 years. So there's actually no way to improve gold. It is already perfect. And this is the big difference compared to, I don't know, software or cars, where you can always innovate. So what we can do is actually to improve the services around. And this is, I think, what many business models here are about, which is not easy. And we've been researching the topic of gold-backed cryptocurrencies since the year 2018. And most of the 20 currencies that we analyzed didn't really make it. And I think one major problem for that is the lack of transparency, the lack of liquidity, and just flawed business models that really didn't take off. So it is a tough business, and one thing that I always have to emphasize when it comes to those questions is, I think we should ask ourselves, do we really want to spend sound money or rather save in gold? I think that's really what counts. This goes back to so-called Gresham's law, which basically says that bad money drives out good money. So I rather want to spend my euros and save in gold terms for my kids. I think this is really, really important. Yeah, so that's basically my view on this topic. I know we launched 2 funds in 2019 that actually combine Bitcoin and gold. It's 75% physical gold stored in Liechtenstein and 25% Bitcoin. And actually, we're facing lots of criticism from the gold community, but also from the crypto community, which doesn't make it easier. But I think, you know, there's a market for...
You started, what, 2 years ago, did you say?
In 2018.
18?
Yes.
So you must be in the money on both.
Yes.
So what's the criticism? We want more.
No, we were lucky. But what we do is we use the volatility of the crypto market, so we write options all the time to actually harvest the volatility of the market.
You know, I've been doing this for quite a long time as well. But I kind of, if you like, spruced up the gold side of it with playing in silver from time to time, because silver does have that additional volatility, double that of gold. That if you are going to get it right in gold, you're going to get it double right in silver, and that just adds to the returns. And when it goes the other way, hopefully gold doesn't go down so far, and you know it's a bit of a kind of win-win. But no, I love that idea. Anything else you would like to add to what you've said so far? I do have some more questions to put to the team. So okay, fine. So thank you very much for that. Really, if you get the chance, guys and girls, have a look at In Gold We Trust. It's brilliant. We'd just like to show them the book. You can, if you feel like taking it home to wherever you're going. I think they're, how much are they? A commission. I can get commission for this. How much are they?
We'll do it later on.
Okay, so we're into the last 15 minutes. We're doing well on time, actually. I am told by the organisers that I would get questions on my mobile from the audience. Being a complete technophobe, I'm struggling to see if there are any questions. So I might actually go old-fashioned and look for anyone who has something that they want to ask the audience just by putting your hands up. And then I'll leave it to you to ask that question. And by the way, congratulations, audience. This is an amazing number of people for post-lunch. Yes, in the front here, please. Yeah. Why don't you shout, John?
And I'll just repeat this here so that everybody can hear. Keith, can you discuss your credit risks that your customers would take on board through the leasing and lending program? Because you're not going to get a return without taking on some risk.
That's right. Anybody who promises a return without risk,
works in crypto.
Run, because either it's a fool or a liar. There is risk, and we do everything we can to mitigate it, starting with we get to know the people. We go on site, usually a few times, to see the business. We pour through the balance sheet, the income statement, cash flow statement. They're required to have insurance. They're required not to have leased gold on balance sheet. There's a variety of things we do, and then we have daily monitoring by their computer reporting to our computer. Every couple of weeks, management is signing something in wet ink. We have outside stock take, an outside firm come in and do a stock take. We have insurance at our level to cover us in case their insurance doesn't pay. We try to do everything we can to minimize the gaps where the gold could go away. And since 2016, the first lease, we haven't lost 1 gram of gold.
Good credit committee.
We have 7 corporate values, and the top one, we call it the Hippocratic Oath for Gold. So the Hippocratic Oath for doctors is above all else, do no harm. The Hippocratic Oath for gold is above all else, don't lose the client's gold. I mean, you know, you got to have short, pithy things that every employee in the company gets it, understands it. We talk about it frequently, and you know, it's an ethos.
Fantastic. Thanks, John. Any more questions? It's really difficult to see from up here, but anyone would like to put a question to this panel? There is that one over there? Yes.
Thanks, Jeff. Thanks, panelists. Subbu here, the editor, New Jeweler. My question is for Mr. Navin. Will the consumers or the investors get interest if they invest in the digital format? And how would you differentiate between the gold bonds in India as well as the digital here?
So this goes back to the whole regulatory framework and the advantage what you have in US that you don't have to call a bank to actually get into leasing. But in this part of the world, till the time there is a license to do that. You cannot do that activity unless you're a bank, because that comes into the central bank working regime kind of thing. So in the current form, you do not get any interest or any holdings of that sort. But this is where we are trying to work with financial institutions, where we can try and develop a product where, based on the consent of the investor, it can be a deposit with the bank, and then we can have some yield working against it. So it would be typically moving that into a consumer approach gold lending kind of a structure, where the consumer can earn interest about it, and we technically become an accumulator or an infrastructure provider. So this is what we are working on. When you talk about the gold bonds in India, the gold bonds in India is something that is similar to what we offer. But with our case, you have much more flexibility, where you can convert it to physical in any point in time. You can invest at any point in time. There is no holding period. It's as good as holding gold in your wallet. And this is what Jeff mentioned, that there was a queue when we stood at the JetX. And we, in the span of 3 days, we already had complaints from our neighboring stall, where people started saying that you are jeopardizing our stall and taking over our stall. And people were just queuing because they wanted to invest in gold. They wanted to find a new medium of investing in gold. So this is where the whole value proposition comes in.
Thank you. Thanks very much for the question. Any more?
Yeah, I've got one here for the panel, actually.
Yeah, of course.
Just a question, perhaps for Keith, but other members of the panel as well, is what typically would a client be expecting to make in terms of interest on that gold over the year?
So in our existing lease book, the interest rates range between 2 to 5% per annum. And then on the bonds to miners, a recent one is 19%. Obviously, very different risk lending to a mine versus leasing to a refiner.
Thanks very much. And from the floor, any more questions? We've got a lot more to do. Is there one in the front here?
Hi, just a quick question on tokenization of gold. What would you say are the top 3 risks that you face when tokenizing gold?
Sorry, did you guys hear that? Could you speak up, please?
What would you say are the top 3 risks that you face when tokenizing gold?
Very good question. You've read my script. Please, who would like to answer?
I think, I don't know about top 3, but one of the biggest risks, I think, is the regulatory environment that we face, right? It's a constantly changing regulatory landscape that we have to deal with in various different jurisdictions that we want to launch in or play in. And we have spent a significant amount of time and resources on engaging with regulators, on legal opinions, on making sure that we have the right licenses, from money transmission to payment service providers to local collection or cross-border collection agencies, and so forth, right? So that has been one of the really sort of big drivers for us. And I think we've taken a very conservative approach to this as well, in the sense that we wanted to make sure that we're in line with regulation before launching. I mean, we could have launched in various different countries, got critical mass, and then, you know, done more of the regulatory engagement, but we've not. And I think perhaps that's something that slowed us down a little bit in terms of expansion, but hopefully that makes us sustainable in the long run. So I think regulation for me would be one of them.
Any the panel, would you like to add something to Nirali?
Yeah, so as Nirali mentioned, regulations is one of the critical one, because even in the UAE, that falls somewhere between Central Bank and Securities and Commodities Authority, where does actually gold fit in? And the biggest other challenge that we have seen is gold is a business of trust. So even then, though we talk about technology, we talk about digitalization, tokenization, and ease, gold is one metal which people like to touch and feel. They want to hold it. So helping them, making them understand the benefit of digitalization, the benefit of making it easy for them to invest, benefit of the savings that they do, is what is about education to people. This is where the governance the DMCC and the other infrastructure providers come into place, including the regulators, to build the trust in the people that they can now go digital with one of the precious metal assets which they have been owning for ages.
Thank you very much.
Can I jump in?
Yes, of course, Keith.
I think one of the most important things tends not to be discussed too much because it's kind of underneath the covers, which is internal systems, internal processes, dual signature controls over everything, internal controls. How does a company set up things? Can one person's signature send gold away, for example? Are they running real-time trial balance every time there's a transaction? Do they test the balance of the system? Would be some things I would look for.
Thank you. I'd like to just ask a question of the panel. So, which approach is likely to succeed in terms of digital? A privately managed, certified by trusted third party, or that issued by a government? Which is the best way to go in terms of looking forward?
I think a lot of the reasons why, speaking in the Western world and for Americans, that people turn to gold is distrust of the sovereign. And so then you turn around and say the sovereign's going to be the issuer. I don't think that proposition would sell very well in America or Western Europe. I can't speak to this part of the world, but...
I think it's a good point. Anyone like to add to that?
I think everyone's afraid to answer that one.
Yeah. That's very good. Okay, guys. 4 minutes to go. So I was going to ask you exactly that question, Keith, as my kind of parting comment, but thank you. Ronald, so looking at these innovations that we've been hearing about today, how do you think the physical gold market is set to evolve with the increasing utility value of gold? There's no doubt you can use gold more today than you ever could. And what do you think that increasing utility could do for the gold price?
I think at some point it could increase the monetary value of gold. If there's really like concepts that celebrate a breakthrough, like an Amazon or a Google of gold-backed currencies. Yeah, so far, it's still a couple of companies doing well, but I don't see really this company or this project really succeeding worldwide. I think in general, it's really the question of your target group. Whom are you targeting? I think when it comes to Gen Z and the millennials, they're definitely much more open to all forms of digital gold, digital money. I mean, if you talk to them, it's just normal to have basically all your brokerage accounts and everything on your cell phone, on your smartphone. If you talk to the boomers that are probably also influenced by the great inflation of the 1970s, the stagflation. I think it's the attitude when it comes to gold is a different one. They really want to have the physical stuff. So I think this is really crucial to understand who is actually your target group, which generation is it. Yeah. But besides that, I would say let the market decide. Yeah, where.
Yeah, I think so. I think that's right. So
just sort of jumping in there. If you look at what HSBC is now doing with digitizing gold, and we haven't really mentioned that, that's a scale big company, and also one that really legitimizes the whole story. But then you look across the sovereigns as well, like Zimbabwe, who have started to become a gold economy, and they themselves are now digitizing gold and using it as a currency.
Yeah.
It's called the Zim or the Zig or whatever it's called. So these are huge stories, and perhaps even in Argentina and other places as well, you're going to start to see sovereigns start to back out of their own currencies, which aren't fungible. Yeah. So I think that we are actually at that inflection moment. And just in the same way as a lot of boomer wealth is now going to Gen Zs, so will a lot of the ways that we look at money.
Absolutely. Look, I think it's fair to say that the outlook for gold in digital and physical form is as bright as it's been. I've been in this market, 48 years, believe it or not, and I think this is the most positive, bullish scenario I've ever seen in the gold sector, and it's not the only way is up, but it is actually the only way is up. So I just want to touch base really on the local market here. I think fantastic market, but there's even more scope for cross-border gold-based financing coming out of the UAE banks, institutional and private investors. But there's something that's been bugging me for quite a while now, and that is the ability to import and export physical gold. And this isn't anything to do with digital, but it is to do with physical. And the big bullion banks, the HSBC you mentioned, and JP Morgan, and so on and so forth, ICBC, Standard Bank, they all have one thing in common. They're very, very active in cross-border trading of physical material. And what I'd like to see in the UAE, personally, is the development of bullion banking industry is well underway to greatness. And I think just that ability to import and export physical material will put UAE banks up there in the Premier League of bullion bankers. So with that, we are out of time. And I think really spot on. Thank you for being such an attentive audience. It's been a pleasure to moderate a panel that I'm in awe of, actually. You know, as I said, I'm a technophobe, and these guys are on the opposite spectrum, but it's been a real pleasure, and just please show your appreciation for a fantastic panel.